One of the most absolutely fascinating mysteries in the stock market right now. We're looking at a company called AST SpaceMobile. You see, this company has a staggering valuation of around $24 billion. But here's the kicker. They are still entirely in the pre-commercial phase of their business. I mean, how does that even make sense, right? Why are investors pouring literal billions into a company that is still just building its core product?
Well, to really understand this, we have to start with a fundamental question. What if a company is valued today not for what it actually is right now, but entirely for what people believe it could become in 5 to 10 years? This is the core hook of our financial investigation today. We're going to explore exactly how expectations, way more than current reality, drive the stock market. And honestly, AST SpaceMobile is the ultimate case study for this. Okay, let's dive into this. What exactly is AST SpaceMobile? In simple terms, they're building massive satellites that essentially act as cellular towers in the sky. And when I say massive, I mean it. These are some of the absolute largest commercial communications arrays ever deployed in low Earth orbit. But here's the true genius of it. These satellites are designed to connect directly to standard, unmodified cell phones. You don't need some special satellite dish. You don't need a bulky sat phone. You literally just need the smartphone that's already sitting in your pocket. Financially, what this means is they are trying to unlock a massive, completely untapped global market. And that is exactly why investors are paying such close attention. Section 1. The Space Mobile Revolution. Connecting the Unconnected.
Now, what's really interesting here is their business model. It's incredibly straightforward but highly scalable. AST SpaceMobile isn't trying to build a brand new consumer brand from scratch. Instead, they act as a wholesale provider. They build the space infrastructure, the cell towers in the sky, and then they sell that network capacity to existing mobile carriers, companies like AT&T and Verizon. The carriers handle all the customer billing, the marketing, the distribution, so AST provides the sky and the carriers provide the customers. Financially speaking, this means if they can get the technology to work, they've got an immediate built-in customer base of billions of people. Section 2. Expectations versus current reality, the core financial contradiction. Let's pull back the curtain on how the stock market actually works. First, we need to define a critical concept without the Wall Street jargon: valuation. In simple terms, valuation is just the price investors are willing to pay today for the possibility of success tomorrow. When you buy a stock like AST SpaceMobile, you aren't buying a piece of their current profits, mostly because they don't have any yet. You're buying a ticket to a future reality. You are paying for hope, for potential, and for future cash flows. And that brings us to the core contradiction. Today's reality is that AST is still totally pre-commercial. Look at the first quarter of 2026. They generated just $14.7 million in revenue, mostly from gateway sales and government contracts, all while burning through heavy amounts of cash to actually build these satellites. But then look at tomorrow's expectation. Investors are projecting revenues of $2.1 billion by 2028. They're seeing the potential for a virtual monopoly on a massive, untapped global connectivity market. This huge gap between today's $14 million reality and tomorrow's $2 billion expectation, that is exactly why this stock is so incredibly volatile. Which brings us to the current stock price, sitting right around $80.66. The question you've got to ask yourself as a financial investigator is, what is the market pricing in right now? Is this $80 price tag assuming the AST will achieve 100% guaranteed success? Is it pricing in partial success? Or is it kind of just ignoring the possibility of failure entirely? So the crucial point is this: stock prices move when expectations change. That is the secret to understanding market volatility. If AST announces good news, like a successful satellite launch, investors' belief in that future $2 billion reality gets so much stronger. Expectations rise, and the stock price goes up. But if there's bad news, say a rocket explodes or manufacturing gets delayed, that future reality suddenly seems a lot further away. Expectations drop, and the stock price drops right along with it. The price is really just a real-time thermometer of investor belief. Section 3. The bullish growth story. Massive scale. If it works. Let's look at why so many investors are incredibly optimistic about this company's future. The entire foundation of this bullish argument comes down to sheer scale. AST SpaceMobile has already secured agreements and memorandums of understanding with nearly 60 mobile network operators worldwide. We're talking heavyweights like AT&T, Verizon, and Vodafone. Combined, these partners represent over 3 billion subscribers. I mean, that is an enormous prepackaged market just waiting for this service. If the tech actually works, the scale of adoption could be unprecedented, unlocking massive revenue almost overnight. And we can see exactly how this confidence builds in real time. Just look at the market context. Over the last 30 days, the stock has been super active as investors weighed different risks. But in the last 7 days, a massive shift. In mid-June of 2026, AST successfully launched 3 of their huge commercial satellites, Bluebirds 8, 9, and 10, into orbit using a SpaceX Falcon 9 rocket. And in just the last 24 hours, the market has been actively pricing in the successful deployment. Why? Because it proves execution. Every time a satellite successfully deploys and unfolds in space, the risk of failure drops. Investor confidence that future revenue is real goes up, which drives expectations and the stock price higher.
Section 4. Execution risks and bearish threats, the cost of delays. Now, let's flip the coin. What exactly are the bears so worried about?
Well, space is hard, and it is brutally unforgiving. Take a look at this timeline. While mid-June was a huge success, just a month earlier, in May 2026, the Bluebird 7 satellite was lost when a Blue Origin rocket suffered an anomaly. AST has this incredibly aggressive goal to have about 45 Bluebird satellites in orbit by the end of 2026 to provide continuous service. But anytime delays in manufacturing or rocket availability occur, it pushes that entire timeline back. And in the financial world, time is money. Delays equal lost investor confidence and really dangerous funding pressure. Simply put, if they don't launch on time, they don't make money on time.
And then, of course, there's the Goliath in the room. $1.77 trillion. That is the implied valuation of SpaceX ahead of its highly anticipated initial public offering. SpaceX, with its Starlink service, is hands down the biggest competitive threat to AST SpaceMobile.
So let's break down exactly what failure would look like in financial terms. If launch delays continue, it means a slower network build-out. This forces AST to survive longer without revenue, which might force them to raise more money on really unfavorable terms, diluting current shareholders. Then there's the SpaceX IPO. If that happens, there's a real risk that investment capital simply rotates right out of AST and into their giant competitor. And finally, cash burn. Even though AST has around $3 billion in liquidity right now, building space infrastructure is painfully expensive. The ultimate financial threat is running out of that $3 billion cash runway before they ever hit profitability.
Section 5, Future Scenarios and Outlook. What to watch next. So, how should we be tracking this company going forward?
We have to think in terms of realistic scenarios. In the upside scenario, the satellites get launched, they work at scale, carriers flip the switch, and consumers actually start paying for the service. Revenue becomes visible and predictable. If this happens, expectations are going to soar to match that future $2 billion reality. But in the downside scenario, say manufacturing in Texas slows down, or there are technical failures in orbit, or they start running out of cash, well, the gap between today's reality and tomorrow's expectations will completely collapse, and the valuation could plummet.
And this brilliantly illustrates exactly what we need to watch next to justify the massive expectations priced into the stock. Don't just obsess over the daily stock price. Watch the cadence of upcoming rocket launches. Watch the manufacturing speed coming out of their Texas facility. Look for actual proof of commercial revenue activation from partners like AT&T and Verizon. And definitely pay close attention to updates on the SpaceX competition. These are the real-world milestones that will actually dictate the financial reality.
So, I'll leave you with this final, provocative thought. Whenever you look at a company valued so heavily on its future potential, you have to ask yourself, is the current price assuming guaranteed success, or is there room for reality to fall short? Just how much are you willing to pay today for a reality that doesn't even exist yet? Thanks for joining me on this explainer, and keep your eyes on the skies. And, the balance sheets.